So the first thing I want you guys to do is utilize forexfactory.com. Why should we utilize forexfactory.com? Well, if you guys don't even know why the charts really move or how they move, it's not some magic that happens. This is extremely important because this is where we get all of our fundamental releases. Why are fundamental releases important? Because this is the data that the markets actually play off of. So every single time you see a forecast, this is what's priced into the markets. Now, what do I mean by priced in? When the charts are moving up and down, doing their things, it's because the markets are pricing these levels in and playing off of that. Now, depending on the way the news releases, we then find our bias and are able to push price from point A to point B, see if one pair is going to move bullish or bearish, and make smarter decisions. So I want you guys to understand that if you have a perfect technical analysis, but it goes against your fundamental bias, you will never win that trade. I want to get into an example of that on USD JPY. So here you guys can see we were in this amazing supply zone right here, right? Price was in there. And as you guys can see on this candle, we had actually started to reject a little bit. So even if you go on your lower time frames, you start to see that price did break structure, was trickling back down. Looks like it's going to hold these highs. Looks like it's starting to create lower low, lower high. And if you were to follow this plan, you could tuck your stop loss over the weekly supply zone, and this could be absolutely in your favor. So when we head to Forex Factory, you guys can see that on this day, we had CB consumer confidence for the United States dollar, and your forecast was 100.0, which means that it was going to shrink from previous times. So that's why when we were in this supply zone, price looked like, hey, you know what? We might be playing in a bearish sentiment here, and we could see some sells on UJ, but price actually came out above the forecast, which was unexpected. So if people are more confident in the dollar, then the dollar is going to be moving bullish in a time like this. So as you guys can see, despite this zone giving us technical analysis in our favor, when our fundamental bias came out against those technicals, you can see price reverses and this whole zone fails. So this is why I want you guys to really focus on fundamentals, because it will help you avoid getting faked out and help you have a clear bias and direction in your trades. If you guys don't know anything about fundamentals, there's this book I really recommend called The Art of Currency Trading by Brent Donnelly, and this very much helped me in my trading journey. I'm going to leave the link to that in the description if you guys want to buy that. Now, another example I want to show you guys about fundamental analysis is AUD CAD. So recently in an Australian dollar bank statement, I heard them say inflation is getting out of control. Now, when I was looking at AUD CAD and I look at my daily time zone, I see we were resting in a beautiful demand zone right here. And I cross-reference this with my weekly, and we're still sitting in a demand zone. Now I look at my 1 hour time frame, and I see we're playing off of a beautiful order block here. I saw price reject and start to slow down. So from this point on, I wanted to see what is the market going to do. So I took a look back at Forex Factory. Now on Forex Factory, I saw previous inflation was 3.6% and our forecast was supposed to be 3.8%. So me looking at where price is priced in, meaning that we're priced into this demand zone over here off of that forecast, and the previous data releases, such as the bank statement saying inflation is getting out of control, I decided to take a buy on this. And my take profit was set very simple. I don't go for far take profits. I just set my take profit to this level right here because I saw liquidity in the market. And as you guys can see, inflation came out at 4%, price moved bullish on AUD CAD, and I caught a very quick take profit on this trade. Now, another tip I have for you guys is choosing the right take profits. Now, what do I mean by that? A lot of us want to take these home runs in the market, which are unrealistic. If the markets only give you a partial move, take the partial move. Don't always look to swing from point A to point B. You can go from A 1.0 to A 1.2, then A 1.4, you might find an entry again to A 1.6. And so you might be able to catch small moves within there until you catch the full move. But oftentimes you guys want to risk your whole account trying to take the big move and let price reverse on you. So for example, if I were to take a UJ buy in this direction, once the news release came out and I saw that price was shifting, if I were to enter within this area here, I would tuck my stops under a previous low that the market created, such as this one right here, and I wouldn't be looking for anything crazy. But if I understand now that this supply zone is invalid because fundamentally we are clearing it, then I'm just going to target the end of that zone. Now, it might not give you the best risk to reward ratio, but these trades are such high probability that I still end up taking them, and I take them with slightly larger risks because I have a much better confluence that they're going to go in my direction. Now, another tip that I have for you guys is when it comes to choosing your stop loss, don't be too tight. You want to focus on zones that have been established data versus potential data. Now, what do I mean by that? If we take a look here at AUD CAD, I could have on this trade tucked my stop loss just under this low over here. But this low to me still isn't a confirmed low because we haven't created a new high. But a low that has created a new high is confirmed data to me. So when I look left, I see we have this low over here, which has pushed this high over here. And that's why I tucked my stop loss all the way under there. I'm going to show you guys another example. When I was in UJ sells over here before all those news releases, I took my stops from this point here because I was covering the weekly supply zone. Now, when I wanted to secure my position, I said, hey, if there's a big imbalance in the market here, if we clear this level and price starts to reject, then we're probably using it as an inverse and price will continue to move up. So I was very smart. Once I set a zone in the market that I see price can reverse from, I then move my stops to break even to just secure my position. And as you guys can see, price actually reversed all the way up despite being super close to my take profit, but I was able to break even. And if I would have kept my stop loss the same, I would have absolutely got destroyed on this trade. So I hope you guys enjoyed this video. If you guys learned something, make sure to like, comment, and subscribe, and tune into the free live streams that I do. I hope to see you guys there. Peace out.